Imagine waking up one morning, opening your investment app, and discovering the stock you bought just a few months ago has significantly outperformed the market. Now imagine that the reason you found that stock wasn't because you spent hundreds of hours reading financial reports or watching endless market news. Instead, it was because artificial intelligence helped you spot an opportunity before most investors even noticed it. That sounds like something reserved for Wall Street hedge funds and billionaire investors, right? Well, not anymore. Today, ordinary Americans are using AI-powered tools to analyze stocks, identify trends, and make smarter investment decisions faster than ever before. The investing world is changing rapidly, and those who understand how to use AI may have a major advantage over those who don't. But here's the important question. Is AI really helping people find winning stocks? Or is it just another hype cycle that will eventually fade away? Let's find out. For decades, successful investing often required an enormous amount of research. Investors would spend hours reading company earnings reports, studying balance sheets, analyzing revenue growth, tracking economic indicators, and monitoring market sentiment. Professional analysts on Wall Street had teams dedicated to collecting and interpreting data. The average investor simply couldn't compete with that level of information. But artificial intelligence is beginning to change the rules. Instead of manually reviewing thousands of pages of financial information, AI systems can process massive amounts of data within seconds. They can scan earnings reports, news articles, analyst opinions, social media discussions, economic reports, and historical market trends all at once. This allows investors to identify patterns that would be nearly impossible for a human to spot on their own. Think about it this way. Imagine trying to find one winning stock among thousands of publicly traded companies. It's like searching for a needle in a haystack. Most investors either rely on financial media headlines or follow recommendations from friends and social media influencers. Unfortunately, by the time a stock becomes popular, much of the opportunity may already be gone. AI changes that process by helping investors discover potential opportunities much earlier. Many AI-powered investing platforms now rank companies based on factors such as earnings growth, valuation metrics, institutional buying activity, cash flow strength, and future revenue projections. Instead of guessing which company might succeed, investors can use data-driven insights to narrow down their choices. One of the most interesting ways AI is being used today is through predictive analysis. AI systems can study decades of market behavior and identify patterns that historically appeared before a stock moved higher. While no technology can predict the future with perfect accuracy, AI can help investors recognize probabilities. For example, if certain financial characteristics consistently appeared in companies that later delivered strong returns, AI can highlight current companies showing similar traits. This doesn't guarantee success, but it can provide investors with a valuable starting point for deeper research. Another powerful advantage comes from sentiment analysis. Markets are heavily influenced by human emotions such as fear, greed, optimism, and uncertainty. AI tools can analyze millions of online conversations, news stories, earnings call transcripts, and investor discussions to determine how people feel about a company or an industry. Sometimes market sentiment begins shifting long before stock prices fully reflect those changes. By monitoring these signals, investors may gain early insights into emerging trends. In many cases, understanding investor psychology can be just as important as understanding financial statements. Of course, AI isn't only being used to identify individual stocks. Many investors are using it to improve their entire portfolio strategy. AI can help evaluate risk levels, suggest diversification opportunities, identify overexposure to specific sectors, and optimize long-term investment allocations. For someone managing a retirement account, such as a 401k or an IRA, these insights can be incredibly valuable. Rather than making emotional decisions during market volatility, investors can rely on data-driven recommendations that align with their long-term financial goals. However, there's something extremely important that every investor needs to understand. AI is a tool, not a crystal ball. One of the biggest mistakes people make is assuming that artificial intelligence can guarantee investment success. Financial markets are influenced by countless unpredictable factors, including interest rates, geopolitical events, consumer behavior, government policies, and economic conditions. Even the most advanced algorithms cannot foresee every surprise. That's why successful investors use AI as an assistant rather than a replacement for critical thinking. The smartest investors combine AI-generated insights with their own research, judgment, and risk management strategies. Let's consider a real-world scenario. Imagine two investors. The first investor buys stocks based on social media hype and emotional reactions to news headlines. The second investor uses AI to screen companies, analyze financial health, evaluate growth potential, and monitor risk factors before making a decision. Over time, which investor is more likely to make consistent and informed choices? The answer becomes obvious. The advantage isn't that AI magically picks winners. The advantage is that AI helps investors make better decisions with better information. What's even more fascinating is that AI-powered investing tools are becoming increasingly accessible. You no longer need millions of dollars or a team of analysts to leverage advanced technology. Today, many retail investors can access AI-driven research platforms, stock screeners, portfolio analysis tools, and market intelligence systems from their smartphones. The same type of technological advantage that was once reserved for large financial institutions is gradually becoming available to ordinary investors across America. As we move deeper into the AI era, the gap between informed investors and uninformed investors may continue to widen. Those who learn how to use AI responsibly could gain a significant edge in identifying opportunities, managing risk, and building wealth over the long term. But the real secret isn't simply using artificial intelligence. The real secret is understanding that successful investing has always been about making smarter decisions. AI just gives investors a more powerful way to process information and uncover opportunities that might otherwise remain hidden. So, can AI help ordinary investors find winning stocks and grow wealth faster? The answer is yes, but only when used wisely. Artificial intelligence can analyze data at incredible speed, identify patterns, monitor market sentiment, and improve portfolio management. Yet it still requires human judgment, patience, and discipline. The investors who will benefit the most aren't the ones looking for shortcuts. They're the ones who use AI as a powerful tool while staying focused on proven investing principles. In the end, wealth isn't built by chasing every hot stock. It's built by consistently making informed decisions over time. And in today's market, AI may be one of the most valuable tools helping investors do exactly that.